If you are looking for only swing trading opportunities in the market, then I want to give you this simple filter. I think all swing traders who are buying and selling stocks should focus on these particular characteristics because William O'Neill and Company and MarketSmith have done research on 125 years of stock market history. And what they came up with is these characteristics. They looked at all the stocks which went up multifold in their journey, returns of more than 100% in less than 1 year. 100, some stocks gave 100% return, some stock gave thousands of percent of return. All those growth stocks were studied and they tried to find out what were the characteristics that these stocks were displaying before they broke out of a particular base, okay, before they started their advance. So they came up with certain criteria, which includes fundamental and technical factors. So when you combine fundamental and technical factors, you get trades which could be positional trades. So if a stock is strong technically and fundamentally, then you could probably hold the stock for 6 months, 1 year, as long as it remains above the 50-day simple moving average or the blue line on the chart. However, if you are looking for short-term moves, you remove that fundamental aspect, you focus on the technicals. You want to buy strength. As a swing trader, you want to buy strength. So these are the characteristics that you should focus on. So what do I mean by best stocks? Best stocks means stocks with a relative strength of 80 or more. Now, what do I mean by that? Say, for example, a stock has a relative strength of 85. What that means is that particular stock has done better than 85% of all the stocks in the stock market based on a 52-week performance basis. So it is like a ranking system. So any stock with a relative strength of 80 or more should be on your radar. Okay, you may not necessarily buy it because it doesn't meet some other criteria which I have mentioned here, but it should be on your radar. Number two, best industry groups. What do I mean by that? So if we look at the entire stock market, we can divide the entire stock market into 197 industry groups. This is what MarketSmith has done. So if we look at the 6-month performance of industry groups and we find out the top 20 percentile of industries, the best performing, that those industries should be on your radar. So your stock should be from the industry which is in the top 20 percentile. See, for stocks, you look at 52-week performance, but for industry, you look at recent 6-month performance. Okay. So stocks with relative strength of 80 or more, industry with relative strength of 80 or more specifically, those industries which have a rank from 1 to 40 should be on your radar. And I will show this in MarketSmith. Don't worry, you don't need to take notes. I will show this on MarketSmith in a while. Okay. Next, it should be in a confirmed stage 2 uptrend. Now, what is the definition of stage 2? A stage 2 stock means where the 50-day simple moving average is above the 150-day simple moving average, and the 150-day simple moving average is above the 200-day simple moving average. That's the definition of a stage 2 stock. To be more specific, okay, if you want to be more strict with your criteria, then the current price of the stock should be above the 50-day simple moving average. Then the 50-day should be above the 150-day, and the 150-day should be above the 200-day simple moving average. And all the three moving averages should be sloping up. That's a more strict criteria for a stage 2 uptrending stock. But basically, it should be 50-day, 150-day, 200-day. As long as that condition is met, the stock should be on your radar. Next, institutional demand. The stock should obviously have good demand, good volume coming into the stock. Because see, when you buy a stock, why should it go up? Okay, unless there is demand, how will the stock go up? So after you buy the stock, you want other people to step into the market and buy a huge volume of that stock. Okay, that is called a stock which is showing strength. So you need good institutional demand. So MarketSmith divides the entire stock market into 5 different buckets: A, B, C, D, and E. A means very high institutional demand, B means good institutional demand, C means neutral institutional demand, there is okay institutional demand, D means institutions are selling, E means institutions are dumping. Okay. So basically, you stick to A or B, A or B category stocks. And I will show this on MarketSmith, don't worry. So good institutional demand. Tight base means what? As the stock goes up, it will take some rest for a while, which is a basing period or a consolidation period. So the base should be tighter. The price should contract towards the right side, and the volume should also contract. So the tighter the base on the right side, okay, the better is the stock. The tighter the base, the more powerful is likely to be the breakout. Near 52-week high means the current price of the stock should be within 20% distance below the 52-week high. If it is more than 20% below the 52-week high, that stock should not be on your radar. So to summarize, if you want to swing trade stocks, if you don't have the patience to hold a stock for 6 months, 1 year, if your goal is to swing trade stocks, then this is the minimum criteria that you should be looking for. Now, I have categorized this best stocks into 3 different types. Here we look at 1 year relative strength, 3-month relative strength, and 6-month relative strength. The rest all criteria remains the same because this is very generic. Okay. So relative strength is decided based on the price movement. So some stocks show a relative strength based on a 1 year basis. Some show strength on a 3-month basis. Some show strength on a 6-month basis. So we want to cover all of those. Sometimes what happened is on a 1 year basis, the stock is showing relative strength, but in the past 3 months, it's basically not, it's going flat. It's not doing anything. Okay. That is probably not a good sign. Okay. So we need to look at all the 3 types of relative strength, which we will see in a short while. I will show you to you in this video. Okay. But in summary, the moral of the story is if I am a swing trader, I am going to look at the best stocks from the best industry groups, which are in a confirmed stage 2 uptrend, having institutional demand, forming tight bases on the right side, and which are within 20% distance of 52-week high. That's the formula. Okay. Those are the things that I am looking at. Here, if you notice, we are not looking at the fundamental factors. I have not spoken about earnings growth, quarterly earnings, annual earnings, sales growth, return on equity, margins, nothing. Only focusing on strength in the market. So this is called swing trading, where you are aiming for double-digit return in 1 or 2 weeks, or maybe 1 or 2 months, you are aiming for a 20 to 40% return. Those are the kind of moves you want to catch, and you want to keep compounding these gains while keeping your losses limited to 3 to 5%. If the stock goes against you, you don't want to book an 8% loss. You want to cut it at 3 to 5%. So when you are booking losses, you are booking small losses. But when you are booking profits, you are booking like double-digit profits, and that too in a very short period of time. That is the essence of swing trading. That is where your average gain is a good multiple, like 2-3 times your average loss. That is how the swing trading mathematics works. I have made a lot of videos on this, but this is a filter that I wanted to give you just to simplify everything for you. Okay. Now let's go to MarketSmith and let me show you how this translates into actual filtering of stocks. So let's go to MarketSmith. Sorry, let me click on breakouts. I have a shortcut for you. See, I have created 3 filters here to show you in this video. 12-month RS80, 3-month RS80, and 6-month RS80. 12-month means for the past, if you look at the 52-week performance of the stock, the relative strength of the stock should be 80 or more. So on a 52-week performance basis, the stock should have done better than 80% of all the stocks in the Indian stock market. So the same concept you can apply to US stock market or whichever stock market you are trading. Okay. Same with 3 months and 6 months. So now we are looking at 3-month performance. comparing the 3-month performance of your stock with all the other stocks in the stock market. So let's look at 12-month. So good stocks. So let's see, best stocks means this filter, relative strength of 80 or more, good and great. Best industry groups means industry group rank between 1 and 40. Confirmed stage 2 of uptrend means you look at the moving averages. Good institutional demand means this A or B. Then tight base you look at on the chart. And 52-week high, see within 20% price change versus 52-week high within 20%. So out of 1, 2, 3, 4, 5, 6, out of 6 filters, 4 are already entered in the software. Okay, I don't need to look at all 6 when I open up the chart. So when I open the chart, I want to see only 2 things, confirmed stage 2 uptrend and tight base. So let's look at an example. Okay. So one of the stocks which I saw recently, let's see what stocks come up here. So I remember, let me put one stock which I remember from my memory. I think it came in the 3-month filter. It was Quest Corporation. Yeah, this one. See, if you see this stock, see, you see this base, very recent base. Okay. I was not available for trading on this particular day. Maybe there was some medical emergency in the family. So probably I could not take this trade. But you see this tight base, okay? Tight basing period. And blue line, which is the 50-day moving average, is above the 150-day, which is the green line, which is above the 200-day. So the blue, green, red price is above the moving averages. All the moving averages are sloping up. So blue, green, red means this part. Tight base means this particular area, this entire base. So this was the day, the high of this candle was the proper buy point. So it should have been bought on this day near that yellow line. Okay. So tight base confirmed stage 2 uptrend. So that's a nice swing trading position. So I hope you understand these criteria. Okay. Let's go to the filter again. So this is the 12-month RS, good stocks, good industry groups, institutional demand, price within 20% of 52-week high, confirmed stage 2 uptrend, and tight base. See, apart from those 6 filters, I have added another filter which is minimum 200,000 shares traded per day. Now, why do I have this filter? Why did I not mention it here? Okay, because I want to stay away from penny stocks. There might be some stocks which meet all of this criteria, but what if there is no volume in the stock? Okay, it might have institutional demand, but if the volume itself, the available shares for trading itself are small, or if the total volume itself is small, then I might be looking at penny stocks or low priced stocks. So I don't want to get into that. So just for my safety, just so that I can safely glide into a stock and glide out of a stock, just to avoid volatility, I added this filter. Very simple filter which I learned from Patrick Walker, which is minimum 200,000 shares traded on a daily basis. That's a basic thing you can expect from the stock that you are buying, so that it's easy for you to buy and sell that stock. In case if the breakout fails, it's easy for you to cut your position and protect your capital. So I don't want to get involved in penny stocks. I don't want to get involved in low volume stocks. I don't want to get involved in low priced stocks. I don't want to get involved in stocks with low liquidity. Okay. I want to glide in and glide out of a stock safely, easily. Okay. That's why this filter is there. It keeps me away from the traps. It keeps me away from volatile stock price movements. Okay. In general. So this is the 12-month RS80. So now you can understand for 3-month, I'm just going to change this and shift it to 3-month RS rating. So I go here. So 3-month RS rating, good stock from a good industry group with institutional demand in confirmed stage 2 uptrend, having a tight base, price within 20% of 52-week high, and 200,000 shares traded per day minimum. That's the second filter. Third filter is 6-month rating, good stock from a good industry group with institutional demand, confirmed stage 2 uptrend, tight base on the right side, price within 20% of 52-week high, and good volume, 200,000 shares traded per day. Now, when you look at these three filters, I think 75% of the stocks are going to be the same, are going to be common in all of these filters. I think that's a good sign. If a stock comes in all the three filters, which means it is doing better in terms of 3-month performance, 6-month performance, 1-year performance. It's like the icing on the cake. But sometimes what happens is a stock might be doing well only on a 3-month basis, but not on a 1-year basis. A stock might be doing well only in the recent 3 months, but not on a 6-month basis. So those are the stocks that we can catch. Okay. So a stock might have poor relative strength on a 52-week performance basis. But if in the recent 3 to 6 months it has been doing well, we might be interested in the stock because we are talking about a swing trading position here. We are not talking about positional trading here. Okay. So these are the three filters. As you can see, for 12-month RS, let's see how many stocks we get. 33 stocks. 33 stocks out of 4,939 stocks, roughly. So this is less than 1%. So this filter rejects 99 point something percent of the entire stock market. So it automatically keeps you away from the junk. Okay. Next. 3-month. Let's see how many stocks we get. 32. Same. So out of 4,939 stocks, you are getting less than 1%. So this is the cream of the cream. Okay. Very powerful filter this is. Again, 35. So it's more or less the same. As I said, 70-75% of the stocks are going to be the same in all the three filters, but it's the remaining ones that we don't want to miss out on, those stocks which are doing well recently in the past 3 to 6 months. They have started their up move. So we want to catch those stocks because they are doing better than the all the other stocks in the Indian stock market on a relative basis. Okay. So to summarize the whole video, the point here is we want to focus on, as swing traders, we want to focus on the best stocks from the best industry groups, which are in a confirmed stage 2 uptrend with good institutional demand, forming tight bases on the right side, and the stock is within 20% of the 52-week high, and which has a volume of 200,000 shares traded minimum. Instead of 200, if you make it 100, okay, no problem, but you have to be aware that you are increasing your risk. You are increasing volatility in the stock that you are buying. You are increasing volatility in your portfolio. So it's okay to go with a low volume stock as long as it meets all these demands. But you have to be aware that you have to be very quick in managing that position. Okay, because the stock could turn out to be a volatile stock. So just be careful. 200,000 shares is extremely fine. And as the size of your portfolio keeps on increasing, you should be inclined more towards higher volume stocks. We don't want to get involved in low priced penny stocks, highly volatile, low liquidity stocks. Okay. We want to be the best. We want to be in the best stocks for swing trading. So I hope this video has been helpful for you. I hope you will start applying this because these are the characteristics that a proper swing trading stock will exhibit. Okay. Assuming you are trading only the breakout. This is not pullback trading or something. This is not candlesticks trading. This is pure old school buying and selling of stocks as they are coming out of a base. So if you like the content that I'm creating on this channel, please like, comment, and share this video so that this reaches fellow professional traders like you who want to become better performers in the market. So we are creating this community of professional stock traders uh, with same values. These are the same things that all of us are looking for when we are buying the stock. And let us come together to fulfill a common purpose, which is making intelligent decisions as a retail investor. We want to take educated decisions and we want to go with higher reward to risk opportunities only. Thank you so much.